And it looks like we are all set and live. You guys should be able to see me. Hello, hello. My name's Joe Boss. This is the daily plan, daily stream for the Plan the Profit trading community. You can join the Discord down in the description where we do trade plans and we try and help each other out, figuring out the risks ahead for equities, FX, crypto bonds, and commodities. There you go. First shot at trying to give a little intro. I think I did pretty all right. Let's get right into this because I want to get into some charts, and boy oh boy, is it late for me. We just had London Open 5 minutes ago, so the charts will be actually quite interesting. The debt ceiling is currently in. Yeah. U.S. debt ceiling passed the House with a bipartisan 314 yays to 117 nays in the final tally. I got that cat running around here. So if you hear if you hear those little jingles, you know who that is. That's the other star of the show. Um, Look, the important thing now that this bill has passed the House is that it's off to the Senate. But some senators are still being wishy-washy about the debt bill. So this is causing more market participants to be neutral, if anything, on the market going into next week. If the Senate slow rolls passing the bill or sends the bill back to the House with changes, worst case, then it increases the risk of another credit downgrade for the United States. And everyone's just trying to position neutral, because this really can go any way. So it's not great to have risk on or to do everything you can, anticipating like this will be the kickoff of a recession, because a lot of people are already positioned on both ends now, with over like the last week more and more people kind of anticipating, hey, growth is rebounding, at least in the U.S. Let's hop back into the U.S. And then they saw Nvidia and all these AI stocks, so it's quite choppy, and so a lot of smart people are getting neutral. If you want a great technical breakdown of the long-term effects from this bill, because believe it or not, some of the things in this U.S. debt ceiling bill are most likely going to be discussed in the 2024 U.S. presidential election debates. All I got to do is go over to this one here from Wells Fargo. These two guys right here, Michael and Carl, they wrote up this excellent report going over the nitty-gritty details of it. They summarized it here in bullet points, but if you scroll down, it's like they got charts. Like, again, Wells Fargo can get quite a lot of, smack, but I've been reading Wells Fargo for so long. They're so insanely consistent, and if you're just getting into reading outlooks, they're my number one go-to for people to read. Yeah. If you want to learn more about some hurdles that could potentially come in the future due to this debt ceiling, if it gets passed, and some of the things with the Senate, yeah, if you want to be informed on the debt ceiling, I think this is the right place to go. And the link to this is also in the description. Now, the last thing before I start getting into charts, and frankly, this is just going to be the last story, simply because this is going to transition directly into charts, right? So this is the second headline of the stream. Yen's slide eases as financial meeting raises hints of intervention. So what does this mean? Meeting, hints, intervention. There was a meeting of Japan's, in this article, quote, top financial authorities from the finance ministry, the financial services agency, and the Bank of Japan. All of them met yesterday. The last time there was a meeting like this was actually back in March when SVB collapsed. So they only meet when they need to make some important, timely decision. So what could they be talking about? What decision are they discussing? In the markets right now, based off this article and a few interpretations from outlooks I've read, it's simply that people are being cautious about the Bank of Japan intervening in markets, similar to what they did, like, actually, I think back in, I think a few months earlier this year. If I'm not, I may be forgetting, it was like Q4 or Q1 of this year that the Bank of Japan intervened. Yeah, no, it was 2022 that the Bank of Japan intervened because the yen was just getting so damn high. Yeah, I remember. Yeah. They intervened multiple times, but just before the very first intervention, there was a meeting like this. So we don't know exactly if this meeting is going to be like a leading indicator for the Bank of Japan to intervene and cause the yen to appreciate. However, now what I got to do is switch back to the chart. Let's go to dollar yen. So this little 2-day drop, this was because of that meeting. So the meeting occurred here when, though, the BoJ and those two finance agencies in the ministry, when they got together and they actually met and it became public that they had met, yen immediately started to reverse. And real quick, I am kind of interested to see how the yield spreads look right now. No, yield spreads are still super positive. Yeah. And is the 1 month yield spread crazy? Oh, it doesn't look like Japan has a 1 month here on TradingView. Okay. Yeah, so things are still stupid bullish right now. Unless the Bank of Japan gets involved, which is why this thing took a hit, it's not going to be that big of a deal. In the last daily plan, man, we sharp reversal from yesterday, didn't we? This thing reversed like 40 pips. And on some of these pairs, kind of like this one here, this was like a 70 pip zip back. Look, this isn't the most volatile thing in the world. None of these FX moves recently have been insanely volatile except for days. However, I'd say, we can go ahead and check net overall. I have a volatility indicator somewhere. I'll have to add it to my chart for the stream tomorrow. But when it comes down to the net volatility things, yeah, when your uncertainty increases, you're generally going to have a higher degree of volatility. Now, going into next week, things are going to be pretty neutral. And look, it really depends on a country by country basis right now whether or not to actually go long the dollar or go short it. Now, don't get me wrong. You can look at, for example, this trade plan that we did yesterday or 2 days ago, and I said, hey, the low is most likely in here for the week, right? You can look at this pivot probabilities indicator and see like, oh yeah, most of your lows occur right around here. And then you get this sick volatile candle and low. And then from here to the low, you're dealing with exactly a 100 pip move lower. Now, that does occur. You do have some probabilities there. This is just more or less a matter of, did you put on too much risk at this point? Look, not all your trades are going to be winners. And, well, if you say, hey, above this line, if we add up all of our probabilities, you could say this plus this, that's 40, so call it 53% of the time. Your low for the week is above this S1 pivot. Okay, that sounds good. But then that implies that 47% of the time your low is below that S1 pivot. So, there you go. 50-50 trades. However, we did hit that probability weighted pivot low and we rejected right on off of it. And up until this trading day, things looked considerably bullish. However, if we were using the range probabilities for your risk management on this specific trading day back here, right? We were expecting the high for the trading day way above here, and that did not happen. So if I go back real quick, I'm going to delete this because it's just kind of getting in the way. That was the hopeful expectation, that you get something that looks similar to this prior trading day. Yeah, when you look at this indicator, you'll see, hey, most of your lows for any given trading day are going to occur above roughly this price. And you can see this is saying, oh, what's it? From, you could say this price or this, let's use this one here because the low is right above that bin. This is 68, so you could say maybe 65 to 70% of the time your low for the trading day would be above roughly this price for this day. So you could just say, hey, I'll put my stop loss below this S1 pivot if I'm a bull. And don't get me wrong, this was a super bearish move, right? But, if you're buying back here like we did in the last couple of videos ago, buying and saying, hey, most of the time you're going to be closing above this area, this isn't the worst, place to go long. If you had a trade from here and you put your stop loss at that S1, you might be a little bit in a loss, maybe a little bit in a profit, depending on where you got in. Again, subjective. Maybe when I do these day-to-day videos, I'll do some paper trades with this because I prefer to swing, and I think there's still a lot of noise in this. But this is a way of me demoing out these indicators and saying, hey, you could still use these for making day-to-day risk management decisions. However, you generally also want to be aware of the larger stories coming from outside of the chart and future expectations that other traders have. So if you keep all that information in mind and you have good indicators for making solid risk management decisions, or at least apt ones, right? You don't need to have like the most insane quantitative risk management system in the world. You just need something that has, over the long haul, positive EV, right? Then you got to learn that, apply that, do it over and over, and in the end, it should work out. This is all just to say, put your damn stop at S1. Put your damn stop at S1, right? Because what's this now? 30% of the time you'll get your low for a given trading day below that S1 pivot, roughly. So that means 70% of the time your low for the day is above that S1. Well, I don't know about you, but if I'm anticipating a bullish trading period ahead of me, and for some reason we're making significant lower lows that have a pretty small probability of occurring, then I need to reassess what I know about the asset. I need to learn more about what I'm doing. Or if I've just been reading and reading and reading outlooks, and I've been reading and reading and reading articles and talking and talking and talking with other traders, I then need to reassess if that information is actually serving me or hindering me. And at that point, it's like you step back, you reflect, you actually try and write out what you know about the thing that you're trading. And, you know, worst comes to worst, you just try and listen to one person who has served you well in informing you about how an asset has performed in the past. Someone who you know is knowledgeable, right? Because frankly, you don't get good at doing this sort of analysis until you've thoroughly educated yourself about how to get market expectations. And by get market expectations, I mean what's the current story? What are the politicians saying in that country? How are the companies doing, right? You really need to educate yourself about, you know, the world, about how it operates. Not just like, oh, here's this economy and we're going to make some time series forecast out into the future. No, you have to learn about not just the quantitative parts of your trading expectations, right? Like price forecasts. You need to learn the qualitative parts of the things that you're trading. I mean, you could argue sentiment falls into that. You know, I certainly would. But if you don't actually understand what it is even that you're trading, like, hey, this is a currency. And every single day, international corporations who have people who live in the United States and people who live in Europe, those international corporations have to do daily transactions of foreign exchange in order to make payments for all of their employees. And that results in a lot of FX flow. So that's one of the reasons why there's an FX market. There's so many reasons why a market exists, and that's a really good way to start off. And by learning why certain markets exist and the motivations for why a market exists in the first place, it'll help enlighten you as to what information you should focus on. Because these markets are serving somebody. They aren't totally just speculative pieces of financial engineering, right? They serve a purpose for people, right? Someone has to get paid. Someone who lives in Europe wants to get paid by their boss in the United States, so they have to make money for the business in the United States, and then their boss needs to pay their employee in Europe in euros. And that's done millions and millions and millions of times a day, right? And with a lot of money. I mean, Disney probably has an FX desk, right? So that's what I mean by like qualitatively try and understand like what it is that why are people even interested in these markets? What is it about these markets, right? I mean, you go ahead and you ask that to any crypto pro. You ask that to anyone who's interested in at crypto even relatively, and they will just nonstop be talking about decentralization and let's pull up the Bitcoin chart here, decentralization and all this encryption and like my blockchain and now my ordinals, right? Check that out. Most of your lows occur right around here on the day. Ain't that sweet? I think I need to load more. No, maybe I don't know. Let me try 2,000 bars. Yeah, that seems a little more reasonable. Yeah. Wow, 90%, roughly 90, yeah, you could call it 90% of your lows occur above the daily S1.5 pivot. So I don't know if you wanted to put your stop loss at the 90% threshold, say, only when you have super extreme moves in Bitcoin that go past this 90% probability spot. All you gotta do is find out where that 90% probability is, put your stop loss there, and wherever it is you wanted to go long, just calculate the difference and make sure that your risk management, is set. I mean, speaking of risk management, um, you can use my system. I cover it frequently in my Discord. I never shut the hell up about it. But I'm kind of give it a name here. I'm going to call it the 20, 30, 50 positioning. So, real quick, it's 3 trades split over 1% of your account, 20 basis points for the first trade, 30 basis points for the second trade, and 50 basis points for your third trade. Just doing that can help you learn a lot about just your trade plans without losing everything on your very first trade entry, right? Because if you risk 1% of your account on your very first trade, guess what? If that trade's a loser, you're now down that 1%. And you can try splitting up the trade into equal little bits, 25 basis points 4 times, if you want to split up 1% of your account over, 3 or 4 days. I don't know. But I find that the 20, 30, 50 basis point positioning helps significantly. And you know what? I'll even demo out something for you here. I did lose on this US dollar CAD. If I could screenshot real quick. In my trading group, I went ahead and I said, hey, I have a chat where I post all of my trades. They're not signals, frankly, right? I'm just being transparent and saying, hey, here are the trades that I'm taking. And copy image, paste. All right, that is the, made that super big. I don't know if you guys can even see it. It's so thin. But this was my buy order. And I got almost right at the tippy top over here. I thought we were going to break this high and go higher, right? I practically bought the top, right? But then I got stopped out and I set my stop loss way down here. This was like a 70 pip stop, right? That was don't get me wrong. If I had put a lot, right? If I was doing $10 a pip on that for my account size, that'd be a lot, right? That'd be a lot to do immediately on the very first go, right? That would be a lot. I mean, hell, for most people, even putting on what is it, a mini lot, right? A micro lot's 1,000, right? And a mini lot's 10,000, or roughly $1 per pip is a mini lot, right? So at $1 per pip, $70 isn't gonna, wreck your account. But if you're still dealing in, especially if your account size is 3 figures and in the lower 4 figures, even $70 doesn't, losing $70 doesn't feel too good, does it? It doesn't feel too good at all, losing that amount. So this is where, I practice what I preach, and you put on 20 basis points of what you intend to have. And let's say in that example, 1% of your account rounded to $1 per pip. Well, in this situation, the very first trade would have put you in at 0.2, right? 20 cents per pip. Well, real quick, if I grab a calculator and did 20 cents by 70, $14 was the loss, right? And frankly, that's the purpose of putting on those smaller position sizes initially first. Because, see, if you put on a trade and then the trade immediately rips against you and you weren't expecting it, right? And the volatility just jumps, right? And it jumps against you. Well, now you've lost an insanely small amount, right? Now, if your trade goes according to plan and it's only like slightly ticking up, then you add on the next 30 basis points, right? Of the 20, 30, 50, right? So you already got your 20 on, your trade keeps ticking along, ticking along. You know, you have more macro information. You have more research that you've read that's confirmed your, not only confirmed your bias that things are looking good to move in your favor, but that maybe the risks you were originally looking at as potential roadblocks are now diminishing going forward. That's where it's like, okay, I have more confidence in the trade, I have more time behind this, I see other people are also talking about it, and, you know, just personally myself, I like the risks here, so you go ahead and you add a little more, and then as the trade continues, you add on that final 50 basis points. Now, also in the opposite situation, where, let's say, instead of this being a huge spike down, the volatility went sky high. Like, what if it went 100 pips up in like 5 hours? You know what did that for me? Actually, it was these trades on New Zealand dollar. I mean, as much as I can show all my losing trades, I can tell you I was short and I got this thing, and I was short all throughout this, and people are telling me, Joe, this is so, I'm getting ground to bits here trying to hold these shorts from this spot and hold shorts from this spot. This is so, how do I maintain this drawdown? I'm like, just don't risk so much. Just don't risk so much, right? And then in the of a single hour, the thing moved 70 pips and it just kept going lower. And ultimately, the thing moved 300 pips. And I anticipated it to move 300 pips. Not here, but back here. I was anticipating it could go from here all the way back down to here at the very beginning of the month with these indicators. So I really know what I'm doing here when it comes down to these forecasts. But that's kind of the point. You don't win them all, right? But when I get them right and I win them, you really knock them out of the park, and you've eased into the position in the first place. And then guess what? At least in FX trading, when you get profit, you can use that as extra margin if you want, and then use that to diversify your risk, again with small position sizes. There's all sorts of risks you just got to be aware of. And especially if you're new to trading or as an intermediate trader, you just have to be super highlight focused on, okay, where can some risks come from? Where can some risks come from? And then gradually look for, okay, where are the opportunities? Where are the opportunities? And these indicators are here to help you look for opportunities, as well as to also get you into the Plan to Profit Discord, so you can actually read the research channels and the trading channels, and then try contributing your own trade plans, so that then you can practice thinking. So you can practice thinking about how to do trade plans with or without these indicators, right? And by the way, while I like FX and I cover FX quite a bit, you feel free to ask me about any asset, right? I read a lot and I watch a hell of a lot of YouTube from a lot of people all across YouTube, from crypto, equities, FX. Like, you'd be surprised how much information I consume while I'm programming out new indicators and I'm writing out my own trade plans for the trading group, and as I'm also helping other people, you know, just in general, show them, hey, here's how you interpret my indicators, showing them how to use my indicators, helping them that way, right? But yeah, man, I think there was a pretty productive daily plan, frankly. I think this was a very clean daily plan. I didn't get to go over too many charts. So let me go ahead and give you one here on dollar yen, considering that's kind of the headline story we had for today. Let's go ahead and I'll give you a trade plan for the month. How about that? And I do want yield spreads on here. Yeah, yield spreads are still super damn positive. Actually, one thing I do want to check out here is, have the yield spreads been decreasing in value since here? So we had total yield spread of about 7. So all the differences across all the yield spreads across all the different lags between itself come up to 7.6 and then 6.6, so it starts decreasing there. Also, sorry about that, I forgot to zoom in. So then it's easy for you guys on mobile to watch. Now we're at 5.6, so these yield spreads are starting to decrease. So they're still, on an absolute basis, very, very, very positive. But now you can start to see, like, yeah, like a little bit of reds coming in here. The yield spreads are getting a little weaker. Oh, and now we just had a pretty red candle on this yield spread. So here's one thing that I'm going to do. I just updated this indicator to 1.4, put in a whole bunch of extra settings, so you're going to get to see this. Here's one setting called rate of change. Let's see here. Oh, wow, that rate of change is still super positive. Jeez. Yeesh. I mean, rate of change is just fine. But I like this this one, so I made that one the default. Yeah, the absolute value of the yield spread is still super positive. Oh, wow. And right now it's at 2.6, or is that yesterday's? Yeah, yesterday's was 2.6, and then wow. It bounced 200 basis points. Wow. So that's pretty strong. Yeah, that's pretty darn strong. One other thing I want to check, yeah, that I don't know. Maybe we come back to 138 sometime this month. I'm just eyeballing it, and then here, yeah, 138's roughly there. 14, roughly 14% of the time we get bullish continuation here on Wayne's pivots. So if I did this and I did a pivot bias bullish continuation, right? This pivot bias. This pivot bias isn't so fantastic. So see this green zone? So this is where you'd go long, just anywhere in this zone. This says, hey, 14% of the time with pivot probabilities, that's what's giving these percentages. It's saying, hey, 14% of the time, your low for the month is in here. Now, I don't know about you, but that would imply, what, 85% of the time the low is lower? I don't know if I'm so confident that I think we're going to be in that 14.3 roughly percent of times that the low is in somewhere in this range right away. So I'm going to hold off on using this particular bias, right? I'm going to use unbiased here, just so I have all the lines back. I would anticipate that the low, if I could get a drawing, a box drawing, the low for the month is somewhere around here. And now let's get the high. Oh, wow. Well, may God help all the dollar bears. At least all the people going short dollar yen if we go past R1. Yeah. If you go past this R1, you're probably going to R2. So, I don't know, man. If you crack 142, you should at least have your eyes on 144. So there could be a trade there for sure. So I'm just gonna put this here, and I'm gonna annotate this. And then timestamp. That's right, we're now in June. Oh yeah, I should probably update my pivot probability settings. There we go. Oh yeah, so this still holds, except it's more like it's going to be a big old guess if you go past that R1. See, that's why it's important when you get this indicator to actually double check and triple check and update your pivot probability settings. Thankfully, the people who usually watch these streams are already members of the trading group and have this indicator. See, that's why you always want to triple check you have the correct probabilities on. And I mean, what, you update these settings once a month and once a week. And I send out notifications to do this. There's another chart that I actively trade on that I already did that for. I just didn't do it here on the daily plan one. Let's go ahead, look back at the lows. So yeah. Oh wow. Yeah, now this is even worse. I mean, before we had a little bit of benefit of the doubt where 14% of the time your low is here. But now this is saying like 4% of the. This is horrible. This is terrible. I'm yeah, we're I'll probably at some point take a trade that will go back down here. I will say that some of the outlooks that I've read on dollar do anticipate some dollar weakness at some point this month. I'm just not sure why they say that yet. So I have a few outlooks saying the dollar is going to get weak sometime in the month of May, but they aren't being specific as to why that would happen or their price targets. So I'm taking that information with a bit of a grain of salt. But these high odds, yeah. Be careful once you start going past R1 because that means you're probably you're trying to catch a bubble effectively. It's like the reverse of a falling knife. Once you cross this R1 pivot, and you can even see, actually I have an alert line right here. I'm just going to move that up to that R1. That's what I want. Yeah. Crossing that, you're dealing with a big unpredictable mass. Hopefully, for anyone who likes to trade this pair, hopefully in that circumstance and in that event, you're already long. Because that could definitely lead to like a trade that makes an extra like 150 plus pips. But yeah, this thing could top anytime in the next week. And yeah, you'll probably see a few trade plans in the Discord on dollar yen in that regard. Maybe I'll cover one more yen pair. What would be an interesting yen pair to cover? I'll do this and then I'll end the stream. Let's see here. How about Aussie yen? Whoa, yeah. Kind of a similar situation, except if you crack this R 0.5 pivot, you're probably going above R1. Yeah, and that's easy going to be like a 100 pip trade. Yeah, roughly 45% of the time, you do bottom out somewhere above this S 0.5 pivot. But man, these are some big ol' odds. Yeah, this is something that you'd need to look at on a week by week basis and following fairly closely, which is another call for why so many groups and outlooks are saying that they're going to be neutral, at least for the rest of this week and part of next week, until some more concrete information comes out that will bias people risk on, risk off, long dollar, long yen, short yen. I mean, a big one is going to be the next BoJ meeting. Next BoJ meeting is going to be probably there's going to be a bit of drama because just they absolutely could surprise at the next BoJ meeting. However, we still have a month, right, till the next one occurs, maybe a little more. So maybe we get something out of the media in Japan, kind of like what happened with that article I showed. You get more instances of news like that where it kind of shows like, oh, the Bank of Japan is meeting and is being discussed open air, right? And in that situation, you would probably see yen strengthened going into the BoJ meeting. Otherwise, if you don't see a super huge amount of articles and news talking about BoJ meetings and in secret or with these, other departments, and maybe they do one or two, Ueda does like some public appearances saying like, it's nothing. But I don't think Ueda's going to act like that, right? He's going to be talking about, hey, we have to keep it a surprise for you, right? What we're going to do with your money has to be a surprise. And that's going to lead to just more neutrality going into the BoJ meeting. But we'll see. We'll see. Well, I hope you guys enjoyed the stream. If you did too, subscribe if you watched all the way through to this point. Share the stream around. Let's grow the channel, get some more discussions, and hopefully more people also into the Plan to Profit Discord. Link in the description, where we can start discussing more trade plans publicly and discussing all sorts of different ways we can manage the risks around those trades and make very robust plans. Yeah, outside of that, if you like the indicators that I'm showing here, there's also links to that in the description, as well as access to a trading group that's included with them. And yeah, thank you guys for watching. There'll be another stream tomorrow. All right, guys. In a bit. Let's see. There we go. All right, in a bit.